There's a lot of confusion in the debate around both gold and Bitcoin. Some people get a bit religious about it.
That's the root of all evil in the monetary system.
The existing international monetary system is not fit for purpose. And there's a growing recognition that's the case. I could turn this into a real tirade.
There is an opportunity for something to come back and become a global standard again.
So why not embrace the latest, greatest, newest, most technologically advanced money?
For centuries, people have looked to and used gold as a form of money, and returning to a gold standard, I actually think would be a net benefit for the world.
I think that was really interesting and rich, but I thought you're really just supposed to say that the price goes up more, really.
And as an investment, you can't look past Bitcoin. You only had 15 years to front run the US government. It's not like we haven't been telling people about it. Can this be like that Seinfeld episode where Jerry just refuses to run?
Here you have a real gorilla in the Bitcoin market.
You're not saying that Mississippi doesn't exist.
People were buying shares of the thing as if all of Mississippi was a gold mine. Well, it wasn't, and it's not. Let's get to the point here. Why is Bitcoin superior to gold? Keep in mind the timing. Very, very fortuitous timing. Bitcoin emerges on the scene in 2008 when a lot of very smart people thought, wait a minute, something is wrong here. There's got to be a better money. Tune in, turn on, drop out, and have our crypto revolution.
We're told constantly that risk is bad, and I don't think that that's necessarily the case. You're constantly told that diversification is good, and I'm coming around to the idea that that's garbage.
Gold ownership is far more widely distributed by value than Bitcoin ownership. Maybe we're seeing the beginning of a run right now. Look at the data. Look at the physical squeeze that's taking place in New York. Look at the delays for physical delivery in London. Is that just noise? Is that just smoke? Or is there some fire? One of the age-old conspiracy theories about Nazi gold or Yamashita's gold in Asia is in fact true. Or maybe indeed when he declassifies documents, we discover that on the island of Luzon in the Philippines, there's 10 or 20 times more gold than in Fort Knox. That would send the gold price plummeting. Something like that can't happen to Bitcoin by design.
You think it's hard today? It was hard back then. It was literally like local Bitcoins. I mean, a dude in a park. No idea who they were. Suspicious as all buggery. So, and even then, it doesn't even sit in your wallet. It exists on the blockchain. Your wallet just unlocks a door to give you access to it. You can hold gold in your hands. It's tangible. And that's a security for people that Bitcoin doesn't have.
We were burning witches 1,000 years ago. So, I mean, why can't we eventually evolve to the point where something that's completely ephemeral and unseeable, a few generations down the line, people won't even question it?
If the American dollar becomes a shitcoin, so to speak, as does the euro and other fiat currencies, then then maybe we do very quickly end up with a gold or a Bitcoin or a combination of standard.
We've been living through this strange era where supposedly we're in democracies, but everything is secret from the public. People are realizing that the existing system is really the problem. Some of the things I wrote about years ago that got me laughed out of the room are now things that are going to help to change the world for the better.
It's not often that the gold price outperforms Bitcoin, but so far this year, gold has left Bitcoin behind, and that means it's time for a gold versus Bitcoin debate. But with a twist. They don't know it yet, but I'm going to ask my guests today to swap sides and make the best case they can for their opponent's side of the argument. I happen to know that both of the guests today are not dogmatically against each other's favorite asset, so this shouldn't descend into a total farce, but who knows? What I really want to do, though, is uncover the similarities and differences between Bitcoin and gold as an investment, and to see whether the crypto and gold camps that duke it out on social media each day have actually learned anything from each other over the years. I'm joined by John Butler, our investment strategist at Southbank Investment Research. John is used to representing the gold side of the argument, but he's also the author of a book called The Golden Revolution Revisited, which has a lot of cryptocurrency commentary. And I'm also joined by Sam Volkering, our cryptocurrency expert, who first told me about Bitcoin back in 2012 when I was still busy telling him about gold. Gentlemen, just to confirm, I'd like you both to swap sides. John's going to give the case for Bitcoin and Sam for gold. And I'm going to choose who looks most confused and nervous about all of this. Sam, give us your alter ego as a gold bug. Why should people own gold?
Can this be like that Seinfeld episode where Jerry just refuses to run? Like
it could be, but that would ruin the premise. I want to see if you've learned anything from John and I over the years. Give us your take for why investors should own at least a little bit of gold.
You've picked me at a wrong time for this, because I've been changing my entire mindset around diversification of assets over the last couple of years. But fundamentally, I would use it as a tool for asset or portfolio diversification, because of its, you are asking the wrong person. Gold is a metal that can be used to make stuff, and that's great. And long term, it doesn't seem to really go down in value. It helps smooth volatility in a portfolio, and you can physically store it. So you can self-custody your gold, which is a great thing actually about it, which is a good thing. Admittedly, it's somewhat more difficult to self-custody than other things out there, but yeah, look, historically it's a great thing over time that people have used for money, wealth storage. A lot of companies like to try and dig it out of the ground, and they're worth a lot of money, so that's a bonus as well. You can get streaming royalties from gold mining companies. In general, it's a nice little portfolio diversification tool. Yep.
Don't leave us hanging about your new philosophy about diversification, because I suspect I share it. Tell us a bit about how you've changed your thinking.
Well, look, in my entire education, from school to parents, grandparents, university, professional life, you're constantly told that diversification is good. You should diversify your assets. You should have a balanced portfolio with a bit of cash and defensive assets. And, it changes over time, where your stage of life is. And I'm coming around to the idea that that's garbage, that if you really want to build wealth, that you need to concentrate more. I'm not saying into one thing, but I think you should concentrate more and take on more risk earlier on than people probably do. And I think we're told constantly that risk is bad, and I don't think that that's necessarily the case in the traditional sense that we're taught. So I tend to think people over diversify and don't take enough risk, and that leads to lesser outcomes later in life.
I suspect this applies disproportionately to the current mantra of passive investing, of buying the index as a whole especially. But let's move on to John. John, give us the case for why investors should own Bitcoin.
Well, just a quick comment on what Sam said about diversification. I would agree. I think a lot of investors misdiversify. They think they're diversifying when in fact they're not. And Sam has a great track record of really looking outside the box and thinking outside the box for what I think many would regard as properly uncorrelated assets. And I do think that's extremely important. But okay, let's get to the point here. Why is Bitcoin superior to gold? Well, look, what do both claim to be? They both claim to be superior monetary alternatives to the dysfunctional money that we have today, the national fiat money, be it the dollar, sterling, or any other. That system has been the source of tremendous boom and bust, resource misallocations, suboptimal economic outcomes, growing wealth disparity. I could turn this into a real tirade. I won't. But the fact is that the existing international monetary system is not fit for purpose. And there's a growing recognition that's the case, both on the gold side of the aisle, that is those who think we should return to some sort of traditional gold-backed monetary system, and those who think, no, let's embrace the new. Let's embrace, Bitcoin, which was the first mover, as it were, of this new purely electronic money, and let's base our monetary system on that. Then there are the extreme monetary libertarians who say let's not do anything but just spontaneously change the world through our own actions and our own embrace of Bitcoin or alternative crypto, perhaps. And we don't, let's just tune in, turn on, drop out, and have our crypto revolution and create our own crypto economy and simply transact in that and opt out of taxation, opt out of the using the banking system at all. Look, why not? I mean, let's face it, right? Technology is the basis of all sustainable human progress. Yes, we need energy, but hey, technology is what allows that energy to be used for human development purposes. So, we all breathe the same air, we all drink the same water, more or less, and the fact is that we all share this planet, but all human progress is based ultimately on technology, and money is a technology. So why not embrace the latest, greatest, newest, most technologically advanced money, and not wait for governments to do it for us? That to me is a very compelling argument in favor of Bitcoin, or again, a crypto approach to money generally.
John, I think that was really interesting and rich, but I thought you're really just supposed to say that the price goes up more, really.
Well, look, I mean, again, you can talk about money as an investment, or you can talk about money as money. The two are not the same thing. And I think a lot of people get the two confused. That is, they think, oh, I should buy Bitcoin because it's going up. That to me is really not what it should be about. You buy something because it only goes up because it's an investment. Something that always goes up can't function as money. Money should be a stable store of value, not a rising store of value. The two are not the same thing. And that's why, for example, if you do look at the history of the world's oldest established money, gold, or you could use silver too. There's not much in it. The price of a well-made bespoke suit on Savile Row in gold ounce terms is roughly the same today as it was a couple centuries ago. There are many other examples of that one can use. Look at the gold oil ratio. Look how unbelievably stable that's been over the decades, when the gold dollar ratio or the gold sterling ratio have gone asymptotic. Okay. So anyway, there's a lot of confusion in the debate around both gold and Bitcoin, in my opinion. And something being a good investment and something being a good money are not the same thing.
Yeah, and that's the distinction that's been lost, especially when it comes to the Bitcoin side of things. And perhaps that's what's being lost with the gold side of things at the moment, given how much gold has gone up. But let's keep things moving. Sam, what does gold have that Bitcoin does not?
History, track record. I think John's bang on. I think if we're talking about money, gold is a better money at the moment. Bitcoin was originally created as money, as a peer-to-peer exchange, and where this distinction has been lost is because of fiat currency, and the reason that they both are now re-entering the fray as a possible going back to a standard, be it a gold standard or a Bitcoin standard, is because of the de-dollarization in the world, and the idea of some sort of alternative currency replacing that. So now there is an opportunity for something to come back and become a global standard again. And I think gold does do that very well, because if you do stop thinking about things in dollar terms, John said if price for a Savile Row suit's the same in gold as it was a century ago, whatever it is today, I'll take that money, please. That'll be great. I'd have no problem with that. And we can still use Bitcoin. But then when you look at the number go up, as you say, Nick, for Bitcoin, that makes it look like an investment. But the problem there is number go up in US dollars or pounds. And So if you keep coming back to that as the denominator, then you're never going to see Bitcoin as proper money, because why would you sell it or use it as money if that's going to be the case? So gold has the historic, and there's a lot of weight in that, right? The fact that for centuries, people have looked to and used gold as a form of money, and returning to a gold standard, I actually think would be a net benefit for the world. That's not to say that we can't or still use Bitcoin, maybe as a hybrid approach. But if you want to talk about money right now, then gold's probably a better option. And if you want to talk about investments, then over the last 15 years, then yeah, Bitcoin's been a better investment. You completely talk about something different than if you're talking about Bitcoin as money. So I think it depends on what we're talking about, Nick. If we're talking about money, gold has got it's got the chops to do that. And as an investment, you can't look past Bitcoin if your denominator is fiat currency.
Yeah, it's a capital preservation versus capital growth argument. You mentioned that you don't believe in diversification, Sam, because you're talking about how to grow wealth. I think for a lot of people in the world, for a lot of asset holders, capital preservation is disproportionately important relative to you. So I think there is disproportionately large role for gold relative to Bitcoin and other cryptocurrencies for them. But John, what does Bitcoin have that gold does not?
Well, again, Bitcoin incorporates cutting edge technology, the concept of a blockchain where you can have a truly peer-to-peer verification system that allows for non-duplicate, non-reversible transactions, and indeed maintains an integral track record of each and every Bitcoin, so you can't have forgery and so on and so forth. I mean, I have to say, you read the original Satoshi Nakamoto paper, and you read it thoroughly and thoughtfully. It's properly elegant technology, right? This is something that is properly thought through and is very impressive. And indeed, that problem that the paper solves for, that is the peer-to-peer verification, third-party verification concept, that puzzle was actually posed many, many years prior. And if you dig around in the blogosphere, you find lots of people were thinking about this for a long period of time before that paper came out. And I think one reason why Bitcoin emerged from obscurity into the mainstream as quickly as it did is a combination of that. A lot of smart people were already looking for this sort of solution, and thus when it arrived, it was able to make a lot of progress fairly quickly. And keep in mind the timing. Very, very fortuitous timing. Bitcoin emerges on the scene in 2008 when a lot of very smart people who maybe weren't thinking about solving that problem saw the financial system meltdown and thought, wait a minute, something is wrong here. There's got to be a better money. There's got to be a better basis for modern finance. Why shouldn't we embrace a newer, better technology? Aha, we've got one. So, I mean, all of that to me, in retrospect, helps to explain Bitcoin's success. Now, that said, I do believe, as I've hinted at in my prior comments, that some people get a bit religious about it and don't necessarily see it for what it is. They just think, oh, it's always going to go up. Again, that's really not what money is supposed to do. So we've got to step back and be rational about it. And we have to allow Bitcoin or alternative crypto, blockchain, whatever it is, to compete naturally and spontaneously in the marketplace with alternatives. And if Bitcoin does come out on top, it comes out on top. And there you have it.
There's a particular angle I want to emphasize here, which is the idea that Bitcoin has a network behind it, and it's all about the network effects of money, whereas gold doesn't really have that inherently in and of itself. And so I think it's almost an unfair comparison because Bitcoin has this ability to move funds internationally across the globe, no real borders to it because of the technological aspect instantly and reasonably low fee and so on and so forth. Whereas doing any of that with gold would be expensive and extremely slow, as people are discovering the hard way right now from the Bank of England. Let's move to a real simple one. John, you go first. Why has the gold price outperformed Bitcoin so far this year? And keep in mind, you're only allowed to say nice things about Bitcoin.
Well, you could simply argue that Bitcoin is more volatile because, as Sam has said, it's the less well-established money, if indeed it is money at all. I mean, I think it's difficult to know for certain whether Bitcoin will ever truly emerge as being generally recognized as money. So Bitcoin is simply more volatile. It's subject to a lot of speculative interest. A lot of people think it's simply a way to get rich quick. Others think they'll get rich slow, but they'll get rich, and they're confident in that, so they're willing to stack and hold their Bitcoin. So, I mean, in my opinion, the gold sort of situation is just more stable and more established. It's more boring, as it were. I think that's the best explanation. There have been times over the past decade when Bitcoin has spectacularly outperformed gold, and then there have been times when Bitcoin has come back down. Let's face it, okay? I mean, Bitcoin has a lot going for it, but even Bitcoin proponents must admit that there is a relatively small number of very major players whose decisions can disproportionately impact the market. Gold ownership is far more widely distributed by value than Bitcoin ownership. You have for example, I mean, just take MicroStrategy, for example, right? Here you have a real gorilla in the Bitcoin market. If for some reason, and I don't know what that reason might be, if for some reason, say, MicroStrategy's accounts are audited and something strange is found there, or if they end up violating some federal law, however arbitrary that law might be, and run afoul of regulators, if they receive some notification from whatever US 3-letter agency that they're going to have to shut their doors, what do you think will happen to the Bitcoin price? I think we know. There's no comparable event that I could imagine that would impact gold. So that's not to disparage Bitcoin, but we just have to accept the reality. It's more volatile, and it's more volatile because it's less well established and more speculative, and that a handful of big gorillas can have disproportionate impact on the Bitcoin price in a way they can't on the gold price.
You're towing the line real fine there on our debating rules, John. So Sam, I'm sure you're itching to answer and respond to certain parts of that, but also take us through why, and this is the moment I've been waiting for years, why is gold leaving your precious Bitcoin in the dust?
Well, to be honest with you, gold is easier. And people might disagree with me on that, but to get Bitcoin it's actually pretty hard. Man, most people don't know how to do it. Most people are afraid of doing it. I could go down to the shopping center and get some gold. Like I could go to a mall around the corner and get some gold. I can jump on the Royal Mint site and get some gold, and they get it delivered to my door pretty easily. There's a confidence in. I come back to that sort of historical thing. There's a confidence there that if people wanted to get gold, it's relatively easy to do, and they know that where they're getting it from, they're going to get it. You don't necessarily have that with Bitcoin. People aren't even 100% sure that Coinbase has got Bitcoin when you buy it until it sits in your own wallet. And even then, it doesn't even sit in your wallet. It exists on the blockchain. Your wallet just unlocks a door to give you access to it. So the idea that you never really hold it in your hands makes it difficult for people. You can hold gold in your hands. I can hold a Rolex that's got gold in it. I can hold some jewelry that's got gold in it. It's tangible. And that's a security for people that Bitcoin doesn't have. And that's a big hurdle to get over. And again, I come back to this idea of history. Because Bitcoin is so relatively new and gold is so relatively old, that confidence in the tangibility of the asset is a very strong factor in favor of gold.
You're really getting into the spirit of this, making the case for gold. I love it. I'm sure you could debunk all of the things you've just said. Let's turn to short-term and long-term performance in the future rather than the past. John, why is Bitcoin going to outperform gold over the next year, 5 years, 10 years, whatever you want to pick?
Well, I think Sam has sort of made the case by pointing out the fact that gold's attraction is largely just due to convention, due to history, due to cultural attitudes. But even cultural attitudes change over time. Now, we Europeans like to think we're all progressive and modern and tolerant and all these things. But were we 1,000 years ago? We were burning witches 1,000 years ago. So, I mean, why can't we eventually evolve to the point where something that's completely ephemeral and unseeable, and that most people would don't have enough maths learning or other technical background to possibly appreciate, much less the patience to read Satoshi Nakamoto's paper. Look, as time goes on, though, Bitcoin has or blockchain technology generally has every possibility of being much more widely accepted. And the fact is, if someday people are buying, selling, trading in Bitcoins or other crypto, and that's how they buy their food and their clothing and provide for their shelter and put their children through school and God knows what else, a few generations down the line, people won't even question it. So, I mean, that's where this could well end up. And Bitcoin and blockchain technology more generally has every opportunity with sufficient time to change the culture. Cultures change, they evolve, but we might need to be rather patient. That could take an awfully long time.
Sam, can you envision any long-term future where the gold price outperforms Bitcoin?
Long term, no, I can't actually. But I do want to. John's bang on. Things change, right? I think it takes 2 generations to complete. But like I said, gold is relatively easier to get now. But 10 years ago, 12 years ago, 11 years ago, 12 years ago, about 12 years ago, it was hard to get Bitcoin. You think it's hard today. It was hard back then. It was literally like local Bitcoins. I met a dude in a park. No idea who they were. Suspicious as all buggery. So now I can jump on my phone. I can buy Bitcoin within a minute if I want to. But I know what I'm doing, and I'm pretty versed in doing this now. I think that I think that takes at least a generation and a bit to come through, because I look at my kids and they exist in a world where they only know Bitcoin. And in 15 years' time, it'll be incrementally easier for them to buy Bitcoin. And they probably will. There are Bitcoin ATMs and things like that at certain shops. They're not that easy now, but soon enough, you'll be able to pop to your bank and you'll be able to get crypto. These are the sorts of things that will evolve with the embrace of Bitcoin in particular to start with traditional finance. So that changes, but that takes another decade, maybe another 2. So change does happen. John's bang on, but again, it depends. If the American dollar becomes a shit coin, so to speak, as does the euro and other fiat currencies, it's hard to see too many central banks digging their way out of the mess that they've created. Then then maybe we do very quickly end up with a gold or a Bitcoin or a combination of standard. Maybe it's a gold standard in the physical world and a Bitcoin standard in digital world and digital commerce. So it's hard to say, but they're both significantly superior alternatives than the current money that we have been using for quite a long time.
Yeah, that's the story that unites it, is the failure of the legacy system as opposed to the alternatives that are growing here.
Absolutely.
All right, last question that I'm going to ask you to stay in character for. John, what is the biggest threat to the gold price on the downside? And Sam, what's the biggest threat to the Bitcoin price on the downside?
Well, the biggest threat to the gold price on the downside, in my opinion, would be a supply shock. And what I mean by that is that one of the age-old conspiracy theories about Nazi gold or Yamashita's gold in Asia is in fact true, and that there's some huge, unknown, undeclared, secret gold stash that was amassed probably during and immediately after the chaos of the Second World War. And that this is discovered. Maybe when Trump audits Fort Knox, he discovers that in fact, there's 3 or 4 times more gold there than people thought. Or maybe indeed, when he declassifies documents, we discover that on the island of Luzon in the Philippines, there's 10 or 20 times more gold than in Fort Knox. That was the gold looted by the Japanese as they went all around China and the rest of Asia for a handful of years there, and then stashed it in Luzon where they thought nobody would ever find it. That would send the gold price plummeting, because let's face it, supply and demand. And if you suddenly had a supply shock like that, the gold price would plummet. Something like that can't happen to Bitcoin by design. And so that is something that could lead to gold dramatically underperforming the Bitcoin price in the near term or over a longer horizon.
It's funny you should say that, because as you were putting the idea out there, I thought the same thing can happen to Bitcoin in the sense that one of the whales starts selling, right? The Bitcoin whales that hold a very large.
Yes.
Obviously, it's different in some ways, but right. Sam, you go ahead with your threat to Bitcoin.
I think that it would be actually somewhat of a similar thing to what you just said. I think if all of a sudden we saw Bitcoin moving from Satoshi's original wallets and moving to an exchange to sell, that would tank the market. Outside of that, successful central bank monetary policy and trustworthy and truthful governments, that could do it. That could do it as well.
Sam's joking now.
Outside of those two things, I'm hard pressed, mate.
All right. So taking off your Bitcoin and gold hats that I've asked you to put on, and reversing back to your real beliefs, there's a particular threat that I want to point out to both of you that has me worried, which applies equally to both gold and Bitcoin, which is the financialization of both assets, especially to Bitcoin more recently, but gold generally as well. On the gold side, you've got this claim that the price of gold is set in the futures market, which is arguably, debatably divorced from the physical in some sort of way. And then on the Bitcoin side, you've got this issue of ETFs and Wall Street increasingly getting in on the game. John, are you worried about this for both spaces? You can focus on one if you want, and then we'll go to Sam.
Financialization is one of those things that, like any technology, can be used for good or evil, can be used productively or can be misused and abused. I think that definitely applies to financial markets, and I believe it also applies to the gold market specifically. That said, I think the gold market has the key exception, though, of ultimately you can call it in. You really can call in your physical gold. So yes, there are loads and loads of paper gold, if you want to call it that, or electronic gold derivatives. And some people say it's kind of the tail wagging the dog. That is, what's happening in these paper and electronic gold markets is driving price. The price of gold is driving price discovery rather than actual physical supply and demand. Yeah, that's probably been true of the gold market almost forever. That is, even in really old times, there were still bills of exchange being written on gold underlyings. This goes back to Roman times. Even the Greeks did it. And so the financialization stacked on top of gold and silver, as it were, that stacking of derivatives on top of the underlying has been going on for a long time. What makes financialization potentially so dangerous is when you're stacking on something that actually isn't there. When you're stacking on fiat promises to pay, that's when it gets properly abused. That's when you end up with situations like the Mississippi bubble and John Law. That's when you end up with sort of tulip mania. That's when you end up with the South Sea bubble. It's basically fraud. It comes down to fraud when you're stacking on top of something that isn't even there. That's where it could be the case that in the gold and silver markets, there are too many claims on the physical. But hey, that does leave the market open to a run. And who knows? Maybe we're seeing the beginning of a run right now. Look at the data. Look at the physical squeeze that's taking place in New York. Look at the delays for physical delivery in London. Is that just noise? Is that just smoke? Or is there some fire? With purely financial markets backed by nothing but fiat, you almost never know until it's too late.
I just want to clarify, John, you're not saying that Mississippi doesn't exist.
All I'm saying is that the Mississippi company became absurdly overvalued. People were buying shares of the thing as if all of Mississippi was a gold mine. Well, it wasn't, and it's not.
Exactly. And the South Sea bubble was an even more blatant example of a promise to do something that doesn't really exist. Sam, I've completely forgotten what the question was. Financialization of cryptocurrencies, are you worried about it?
I come in and out of this. On one hand, yes, for the exact reasons that John said, is you find that all of a sudden Wall Street or the city or whatever financial center you want to talk about decides to drum up these fancy, complicated financial instruments that are backed by women of prayer, not actually by something of the actual asset itself. So yes, when you start to involve debt and gearing and lending and complex structures and those sorts of things, financialization in that aspect, yeah, it does. Terrifies me. That's the root of all evil in the monetary system to date through history. It's the root of all evil in cryptocurrency as well, is when, the collapse of FTX in 2021, 22, whatever it was, 2022. Again, it was House of Cards, right? So these are the things that worry me. But at the same time, the thing about Bitcoin is that it is open for everyone. And that includes the banks or the institutions or the government or you, me, and everyone that's watching this video at home. So in that respect, it's like, you know what? Have at it. See what happens. Because that's the whole point of a open, free in the sense of liberty system, is that anyone could get in there, test, try, and do what they want. If they bugger it up, then that's on humanity. And then something else will come along that's maybe better. I think not that I think it will, but if something like Bitcoin fails, then something better will come along. Human ingenuity and technology and advancement lends itself to suggest that over time we will find a way to fix stuff that's broken, and that includes the monetary system. And Bitcoin could be that answer. And if it's not Bitcoin, then it will be something else. But maybe 100 years time.
As far as I'm concerned, you've both sold your soul to the devil, the gold market and the Bitcoin side of things. But we can go even worse, which is the idea of the government getting involved, which has recently happened for both assets as well. We've got the creation of Bitcoin Strategic Reserve, and there's talk of Trump going back to a gold standard, or at least auditing Fort Knox to see if the gold is really there. John, this was a big part of your book, Golden Revolution Revisited. Sam, you predicted that the Bitcoin Reserve would at least come into the news cycle, that it would be considered by the Trump administration. So congrats to you both. But are you worried that an idea that was sort of fringe and was sort of laughed at when you first made those claims and arguments is now becoming mainstream, and so we're no longer contrarian, or is this a total vindication for you?
I mean, I find it reassuring, and back to Sam's point that he just made. The fact is that with the rise of interest in Bitcoin and crypto generally, and with the reawakening of interest in gold, you have this interesting situation where people are realizing that the existing system is really the problem. And this is why I find you frequently do get very high quality debates between the Bitcoin community and the gold community, because they have so much common ground. And so the fact that that common ground has grown so much, because both those communities have grown so much in recent years, I find it not at all surprising that that has bubbled up to the level of government. And that to me is very, very healthy. We've been living through this strange era where supposedly we're in democracies, but everything is secret from the public. That is not healthy. And I get a sense that that's changing now. There's a willingness to look into the operations of the Federal Reserve and other central banks. There's a willingness to audit the gold stock, as you just mentioned. And there's a willingness by a far larger number of people, some in positions of power, to take a look at crypto and blockchain and Bitcoin and think about it more seriously, and perhaps to learn something about it. And as Sam says, maybe crypto isn't perfect in its current form, but by looking at it, it helps you to learn what is going wrong with the current system. And if you're in a position of power, maybe you can do something about that. So I find this is all extremely salutary, and I'm extremely optimistic that some of the things I wrote about years ago that got me laughed out of the room are now things that are going to help to change the world for the better.
Yeah, there's nothing like prices going up to convince people of the merits of holding Bitcoin.
That's part of it too.
Sam, we saw what Biden did with the strategic oil reserve. Do you really want someone in the government buying up your Bitcoin?
Ultimately, no. But again, if they want to, have at it. It's their choice. If people have, decided that this is not something for them and the government comes in and decides to do it, you only had 15 years to front run the US government and any other government. So it's not like we haven't been telling people about it. Again, it's hard to, if it's if it's a proper libertarian system where anyone can have access, then it doesn't matter if you're a government, a bank, an institution, or an individual. The idea of the US government holding 1 million of them, which is a significant amount of the supply, is, look, ultimately, that will probably make number go up a lot, which will make a lot of people very happy and a lot of people very sad that don't have more of it, which is everybody. So again, if you want your denominator to be US dollars or pounds, then that's probably a good thing. You probably do want the government to own it. But I think as well, what a lot of people necessarily don't quite comprehend, and this is an important distinction to make, is just because they hold it doesn't mean they control it. And that comes back to the distribution and decentralization of the network itself. So again, that's why I don't really have a problem with them holding Bitcoin itself, is because they're not necessarily at this point controlling the mining like perhaps elements in China might be. But again, that's probably another long form discussion for another day. Hold as much as you want, just don't control more than 51% of the network.
Well, I really hope that you've only got 15 years to front run the government makes it into the final edit of this video. Just in case it doesn't, I'm going to briefly pause here. Thank you both for joining me for what I hope was an unusual take on the all too often repeated Bitcoin versus gold debate. Of course, ultimately, you are both completely wrong. The answer to all of the questions above is silver, no matter what the question might have been. Thanks everyone at home for watching. Hello and welcome to our bonus section where we ask what this video means for you as an investor. Given the choice between Bitcoin and gold, the correct answer is always both. In fact, they complement each other in all sorts of different ways and should both benefit from the trends which John Butler, Sam Volkering, and I see playing out in the world. And that's the real story here, the decline of the legacy financial and monetary system through inflation, technological change, and of course geopolitics. The lesson is that you must do something to avoid falling behind. Bitcoin and gold should be top of the list. If you enjoyed this video, I'd like to recommend signing up to Sam Volkering's free newsletter, AI Collision. He covers how technology is changing the world and how investors should harness those changes in their own portfolio. Sam also has a free report out right now, which covers how you can profit from the rise of artificial intelligence specifically. To download it, check out the pinned comment or description of this YouTube video. Or if you find yourself agreeing more with John Butler's take, do check out his free report on the UK's own Magnificent 7 stocks and why they are set to outperform America's own. Thanks for watching.